Harrison, you want to be our moderator?
Sure. So each one of you will go down the line. What is your #1 bold prediction for what DeFi is going to look like in the next 12 months? 12 months and then in 5 years. You want to start?
I'll start. So I think that, over the next 12 months, you're going to keep seeing the younger generations, the millennials, be more focused on DeFi. It's starting to be that when you talk to the 25 to 35-year-olds, they don't know what stocks are and they don't care. That's their parents' game. And they actually are starting to look, at stocks and their parents with disdain, as they make returns and as they participate in what they think is the future. So I think what we're looking at right now actually is the manifestation of the next generation taking control of their lives. So I see DeFi growing rapidly, especially in the 20 to 40-year-old range. I see businesses that are in the legacy world trying to elbow their way into that world with products that we don't really need that centralize what's supposed to be a decentralized solution. It's kind of like, that people offer, the credit card companies offer you insurance, right? For everything above $50, you can't really, by law, you can't be charged more than $50 on your credit card if there's fraud. But the credit card companies try and sell you insurance, for the excess losses on your credit card. And I think you're going to see the same thing start to happen in DeFi. And then I think in 5 to 10 years, I think there's no more Wall Street. I think that the United States is not the center of the global capital markets. And I think you see a democratized access to community and opportunity that is a fundamental change in how we communicate with each other.
And where will the center be if it's not the United States in terms of capital markets?
Well, I think it's going to be everywhere and nowhere. I think the whole idea, if I have to quote
Binance, kind of like Binance.
I have to quote Neil Stephenson, otherwise no one will recognize me. This is all about this. These metaverses are not games. They're the future, okay? These metaverses are where you're going to communicate and where you're going to live, and where you're going to spend your time, where you're going to find ideas, where you're going to make friends, where you're going to socialize. And so we're just seeing the spin-up of where the new society is going to be generated. And those metaverses will become their own jurisdictions, right? And you'll participate in it because you'll volunteer into it, not because you're told that that's where your mother was standing when she gave birth to you. Right? And so you'll volunteer into one environment because you trust it, because it gives you the benefits that you want, and because you see the opportunity that you're seeking in that metaverse, or you'll move to another one because there'll be nothing to hold you there.
All right. What's your 12-month prediction and your 5-year prediction?
So over the next 12 months, what we are seeing is KYC in DeFi is probably one of the biggest trends that we've noticed. A lot of the launch pads are now KYCing. A lot of the airdrops, even though you're eligible, you're required to KYC. We're seeing a lot of harsh regulations getting in place or being debated, particularly in India. So one of the concerns is that we really don't know, who's trading what, and where's the money flowing. Even in the United States, there has been concerns around it. With some of the teams that we've been speaking to, such as Avalanche, they're building a KYC verified DeFi system, which sort of takes away some of the appeal that DeFi has, but it's still decentralized to a great extent. So my prediction for the next 12 months is KYC is here to be. It's probably going to get stronger and more stringent. Another thing that we see is GameFi. GameFi is getting larger and larger. So those that don't know me, I run Frontier. So I look after partnerships and alliances, apart from running Bison Fund. So we're seeing a lot of GameFi developers approaching us, asking us for an integration of their in-game assets and NFT marketplaces, their in-game stores, so that people can swap and trade their NFTs natively within Frontier. So GameFi is also one of the few spaces that we are focusing on as a fund.
In 5 years?
Over the next 5 years...
Be bold.
Over the next 5 years, I think, CeFi is probably going to get, heavily clouded. under the DeFi vision, and a lot of it is going to be KYC. So the disparity between CeFi and DeFi is going to get blurry. And of course, DeFi will fundamentally be more transparent. And hence, that's why, DeFi is probably going to get stronger in the longer run. We're already seeing interesting applications. Okay, some of the companies some of them have folded. But what they're now approaching is more so for like mortgages and credit cards as well. We're seeing DeFi scores, like say for example, ArcX and several others are coming up. We're looking at marketplace of marketplaces within the NFT side as well. And so for gaming as well.
All right, your turn. 12-month prediction
I love that
in 5
you
years.
start with the hard-hitting questions. It's always difficult to make predictions in this space because oftentimes you get a slap in the face after.
That's what makes it fun.
Exactly. I think just from my personal experience, I started in DeFi in 2018 at one of the first generation DEXs back in the day, and that was a very, very different world than what we see now. And this year, just 3 and 4 years later. So I would say if we start with a 5-year, then maybe it's something we've never seen before. 2018, all of us, myself, I came from TradFi, so when we're trying to build a DEX, we are looking into order books or having market makers, and it's a chicken and egg. It's really difficult to get liquidity. It's really difficult to bootstrap that. But Uniswap came in and really thought outside the box, and using the AMM model, and that's what the crypto native crowd needed. And that was really a lesson for myself as well. So if I think ahead in 5 years, it might be something that's completely different, nothing that looks similar to traditional finance at all within the DeFi space. And then I think it's going to expand beyond what we see now in terms of underlying, not just crypto, maybe not just NFTs. It could be anything. It could be already living in metaverse. So I think we want to keep it open for the next 5 years. But for the next 12 months, I would say I see 2 trends. One is on the traditional finance side. There's so many talent, so much capital flooding into DeFi. So a lot of people are trying to leverage the products already out there in the TradFi world to build decentralized spot exchanges, decentralized derivatives exchanges, including swaps, options, and expanding beyond that in terms of credit, lending, et cetera. But then I think there's also another wave of the more crypto native crowd building AMMs, building maybe NFT-based financing, really marrying DeFi and NFTs together. So I think in the next 12 months, right, then it could be GameFi, it could be any art or any other underlying assets being brought on-chain and having financial applications on top of that being made possible by DeFi.
So if you look at TVL today, about 70% of DeFi is on Ethereum or Ethereum scaling solutions, about 70%. If you look forward, do you think that percentage will be roughly the same? Is it gonna be 100% Ethereum, 10% Ethereum? It'd be great to hear if you think Ethereum will still be, the leading platform underpinning DeFi.
I think that Ethereum has a big question mark on it right now. Obviously it has the largest market share. It was the first. It's the preferred platform if it wasn't for the expense and the speed, which are supposedly being fixed by a big upgrade that is continually being delayed. So I think the question for Ethereum is one of execution by the community, which can't be guaranteed. I think that the new competitors that are coming around, Solana, Polkadot, Avalanche, they're all interesting, but they're not Ethereum, right? And so it's really, we're watching right now, a battle, battle royale to see whether Ethereum can hold on. Personally, I think Ethereum has a future. I think it's very hard to unseat the incumbent. There's a big advantage to being the first out. You have the name recognition. It's just you become the default choice. I think that if they can fix and deliver on the promise, Ethereum, becomes money. I think Bitcoin is gold, and I think Ethereum is money. But if they stumble and a few more projects come around, and the real thing to watch is community. Look at GitHub and look where the commits are. All right, I was big in Cardano 2-3 years ago when it was in the doldrums. When you looked at the commits on GitHub, you could see there was a lot more activity on Cardano than any of the other platforms by developers. And so it said to me, wow, there's stuff coming around the corner, and this is a market where you want to go, and that's ended up being a 100x return. So, I think that's the same thing with the layer one. It's going to end up being who has the community, who has the energy, and that energy actually drives value.
Definitely. So I think unless ETH 2.0 rolls out, all the other chains are going to start eating into Ethereum's market share. So ETH 2.0 is delayed since really, really long time. Apart from that, we see that Ethereum is no longer feasible, especially if you have microtransactions. So I think anything less than $1,000, $2,000 is really impractical. A lot of our teammates that are new to the space are looking to experiment, and they realize that a lot of it doesn't make sense. Hence, it's a lot easier to get them to experiment on Polygon and Avalanche. So a lot of the new DeFi users are getting on other chains. As a fund, what we see is Solana. So we refer to something called Blocktivity, and that's basically a website that tracks the number of developers working on each of the chains. What we see is Solana seeing a massive amount of traction. So is Near, so are the Polkadot parachains as well. So unless ETH 2.0 rolls out soon enough, all of them are going to have their own market share. So overall, the ETH dominance from 70% is probably going to get to like say 50%, but the larger growth is still going to be from the other chains. So the space is going to get much bigger than what it is currently.
And I think for me, just because started building on DeFi early on and really saw Ethereum being battle tested over the last however many years, 7 years now, and that is value, and the mind share that you already gained, the community, that it might be hard to replicate. And I think that's still my stance on Ethereum versus the other layer one solutions. And of course, people criticize Ethereum for not being so efficient or scalability issues, but I think community is working on scaling that, solving a lot of infrastructure problems, and I think the rest, right, the Avalanche, Solana of the world, they just offer different trade-offs between efficiency and decentralization. So I think at the end of the day, really is the ethos of the community and what people believe in. And I like to think we're in the Web 3.0 discussion right now, but if you look back on Web 1.0 or 2.0, the internet protocol, TCP/IP, that won out at the end, that became the standardization, is not necessarily the best protocol out there. It's just because it got enough mindshare, everybody's using it, and then it became the norm, and that might be what we see within the blockchain space as well.
Cool. And when you think about the tokenization of assets, do you think that there's actually going to be real-world assets that are being tokenized in the future, or is it going to continue to be net new asset classes like gaming, speaking about gaming, or will it be a mix?
I think that there'll be, I think both will grow, and I think they'll each be different. This craze right now, I'm going to get shot up here, so hopefully there's like bulletproof glass. But this idea of attaching value to, content just because it got tokenized, I think is ridiculous. And my advice to anyone who's holding an ape is, I'm happy for you, I'm proud of you, and you really should sell it. Because the idea of going to your grave, proud that you held on to an ape for life and that was what changed your life, that's a pretty interesting story. I think that the interesting thing about NFTs is not that you can take a pixelated art and get someone else to buy it. I think it's that the technology allows you to take almost anything and create a liquid market for it and trace the ownership and have royalties and attribution. And so what you're doing is taking the friction out of the system and enabling people to basically turn everything into eBay. You know, eBay was invented originally very similar to NFTs. eBay was invented by a guy, you know, Pierre Omidyar, whose girlfriend, or maybe wife, collected Beanie Babies and couldn't get a liquid market for her Beanie Babies. So he created a site where you could list Beanie Babies, and Beanie Babies went through the roof when liquidity came in, right? And then Beanie Babies became worthless, but eBay became the marketplace of the world where you could take anything off your house and sell it. And I think that NFTs are going to be very similar to eBay and Beanie Babies in the long run. In terms of DeFi, I think DeFi and GameFi and all these different FIs that are distributed, I think that they're right now that we're just at the beginning of understanding them. And in the long run, they're just going to be underlying technologies that enable you to do other things that you want to do in your life. So what's happening is that the hackers and the communities are figuring out cool things, cool ways they can organize electrons to do cool stuff, right? But how that actually gets used by humanity isn't even known yet. As Annabelle was saying, I totally agree. We don't know the ways that, but what's going to happen is you're going to have iOS apps where you press shiny buttons on your phone and really cool stuff is going to happen. And you're not going to remember that that came from DeFi or that was CeFi or that was GameFi or whatever, or that was a metaverse. It's just going to be the way that you transact. And so I think these technologies right now, it's important to recognize that we're at the formative stage, we're at the the gold rush stage, and how these things get tied together is going to be of a huge impact on our daily lives.
So one of the things, that's a good way to assess real-world applications in case they can move to Web3, is real estate. Okay, so let's say, there's a portal called Realty Mogul, okay, wherein anybody can invest, say, 5,000 onwards, okay, into several real estate projects. And there has been several attempts of setting up similar crowd-funded portals in a decentralized way on the chain. I won't name some of them, but a lot of them haven't really taken off. Part of the reason is that there's always a need for an asset manager. Okay, so that brings in an element of centralization. And you also need to have a third-party custodian. The custodian will always operate at the instructions of the asset manager. So is it really DeFi? It's not. Is there a lot of capital flowing in? Except for like a few millions, it's not. But if you compare with the, say, gaming assets or NFT, you see like billions of dollars of investment flowing in. You see tens of thousands of users, okay, for any new game that's coming up. So fundamentally, anything that takes off in DeFi necessarily has to be a tech-driven innovation. It's not to say that crowd-funded real estate portals can't really take off, but there has to be a better mechanism which hasn't evolved as yet. So that's why you see Securitize and several other players having very limited success in this.
I can't agree more. I think it doesn't make sense to think that just because you bring something on chain, it suddenly becomes more valuable. Like James said, right? Blockchain technology is just a means to an end. It is a technology that enables a lot of the new features that can be possible, but doesn't really fundamentally alter the value of the underlying. So we see a lot of people trying to do STOs on assets that probably doesn't make sense. And of course, investors are not stupid. So they're not going to pay for something that's not worth this much. But with that said, I do believe in the world of digital wealth, and I think especially with the Gen Zs and whoever comes, they are digitally native. They'd rather have everything they own on their phone. They can see their crypto, their profile picture, the skins and the games that play all in one place in a digital wallet, as opposed to maybe having gold or cash stored under their pillow. So this is it's a societal change. It's a technological change that led to a new social and social interaction, I think. So I think eventually we will have tokenized assets, but with a value proposition that makes sense. And blockchain is just underlying the Web3 technology that makes it possible.
Yeah, can I throw in a thought there? Because I think that where this all goes in the future is universal basic income. I think that DeFi and all the different GameFi and the metaverses, you're going to start to see that we have so much growth right now and such an expansion that we'll have the ability to start to use these tools to share the wealth. The difference between the new economy and the old economy is the old economy was exclusive, right? And it had to do with scarcity. And the new economy is going to have to do with abundance and sharing and allowing a larger audience to participate and monetizing the value of that community and then sharing it back with the token holders in a way that's decentralized and doesn't go through centralized governments. And I think that opportunity is a chance to change the social fabric globally and create, I don't want to be too idealistic, but it addresses a lot of the issues that we're having right now in the way that we think of the world in terms of us and them.
So since you mentioned universal basic income, CBDCs is that really the future, as a lot of the Financial Times and some of these publications talk about it, or is it like the biggest red herring and no government is actually really going to be scaling it out on any meaningful way? Do you want to start?
Well, I'm born and raised in China, so very close to the China CBDC development, and actually having used it myself in Shenzhen and in Beijing. I would say that China is very serious about CBDC, but perhaps because of different reasons compared to the Western markets. And fundamentally, it's very different from crypto. It is quite the opposite. Of course, it's digital currency, but it's just basically replacing the cash in your wallet in a digital format. But a lot of the other features that crypto has to offer, of course, right? It's a different game here. But if you look at the US, and I think a lot of Latin American countries, in Europe as well, everybody, all the central banks in Singapore as well are looking into CBDCs as a way to really move digitally. And that's perhaps a different value proposition than why China is doing it. So.
I think CBDCs have a very innovative use case. It brings in mobility that essentially belongs to the cryptocurrency space, to real-world fiat currencies. So it's definitely something that's very innovative. It'll be, and especially if it's backed by government, it ensures that a lot of the reservations that people have about cryptocurrencies are taken care of. So a lot of people prefer to pay in cryptocurrencies, not just from this domain, but even otherwise, partly because of the exchange rates and the costs of the traditional banking network. So with CBDCs, a lot of those concerns get taken care of. People can continue to deal with currencies like, India is very, very serious about launching its own CBDC. And what we would then see is, since a part of our team's based in India and a lot of our users belong to India, is that this is for Frontier. A lot of them will use CBDCs as an on-ramp, which currently gets a little bit challenging and tedious with the regulations in place. So that's why we're very, very bullish on CBDCs, because it's going to accelerate the whole CeFi and DeFi space.
I think CBDCs are the opposite of crypto, as Annabelle said. I think you have to be very careful. I don't think that the current governments have a choice but to issue CBDCs. But I think that they very quickly become tools of control and of violation of privacy. And so, because I don't think the governments, even with the best intentions, can help themselves. And governments change. And once you've surrendered your information, most importantly, once you've surrendered your identity, right, you're gone. The game is over. So, I think you have to be careful as a participant. And I think that it's the logical and almost only response that the existing governments can have, but I think it's an indicator of why we need to move towards decentralized, cryptographically protected identity, value, and information, because in the long run, you're going to find that that information that you gave up that you thought was free ends up being very expensive to you.
And perhaps we have time for one more. I'm sure you guys get asked all the time around what are going to be the drivers of DeFi adoption. And for us, when you interact with people, something that's really scary is self-custody, especially if that's not something that you've done before. So do you think over time, more users of DeFi are going to become more comfortable with the idea of self-custody, or will there be some type of intermediary that will do it on people's behalf?
So I'm very close to the MetaMask team from my time at AirSwap, and as much as I use MetaMask a lot, I think all of us here agree that's not the easiest wallet to use, and for first-time users, it can be very daunting. Or am I signing the right one? And every transaction is so expensive. So of course, this needs to be fixed. Not just MetaMask and Ethereum, but all the other layer ones having their own wallet solutions, which is a very key infrastructure to be solved. And that can become quite cumbersome for one user to manage all these different wallets across different chains. And that's why here at Amber Group, we are aiming to build a one-stop shop, one wallet. It's sort of your gateway to digital wealth, precisely because of all the points that we touched upon earlier. So we believe that in this way, it's just very makes it simple, abstracts away a lot of the complexities for everyday users to interact with blockchain. You don't have to be a blockchain expert to come into digital wealth, to embrace it. All you have to do is just be open-minded and come try out.
Definitely. So if you look at the total number of users Binance has versus all the DeFi wallets put together, Binance and Coinbase, easily surpass all the DeFi wallets created. And why is that? Because most people aren't comfortable with self-custody. So, and that's why you see CeFi being a major play right now. So you see Celsius and so many others that are dominating this particular space. So I think, over time, there will be innovative solutions coming up around how do you take care of key management, custody. Okay, and I think as people get more comfortable, they want to access greater yields, they will eventually migrate, but there's still a lot of middleware intermediary solutions that need to be in place before something like that happens.
I think that, what was the question?
Are more users going to be doing self-custody, or are they going to be happy to let someone else do it
So
for
again,
them?
talking about freedom, and information, it's cheap to give it up until it's not. So I think that you'll keep seeing the current trends until there's a couple of instances where it matters, and then you'll see a big move towards self-custody. And I also think you'll see self-custody look a lot different in the future than it looks today. As the interfaces get better and as the programmers get better, as the communities get larger, so more profitable to service. But we're one of the largest producers of Filecoin, right? And in the last election cycle, the right-wing voices were shut down by AWS, by Amazon. And they basically couldn't participate in the election, and it made a difference statistically, right? And so they were censored by one person at Amazon that decided to turn a switch. So now if you're the chairman of Chase Manhattan Bank or of Ireland or El Salvador, and one day you realize your servers are down because the US government told Google, Amazon, or Microsoft to turn off your server, right? You're no longer able to say you didn't know you could be censored because it's happened already. So in essence, you're negligent, right? And when this does happen, because make no mistake, it will happen. And when you open the newspaper and you see it, there's going to be a huge rush towards decentralized, censorship-proof storage, just like there's a huge rush towards decentralized encrypted currency, right? And you're going to see this industry by industry by industry, this movement towards self-custody and, not your keys, not your crypto, not your keys, not your identity, not your keys, not your information, right? And so I think that the answer is yes, I agree with where we are today. I think that there will be quantum shifts that happen over time due to, instances that are out of our control.
Here, here. Keep going? All right. So is there a project that you either are invested in or you use that you feel like doesn't necessarily get the attention that you feel like it deserves in the DeFi space?
Specific example?
So like for me, the app that I use the most is QuickSwap. I use QuickSwap every day. It's pennies on the Polygon network, and the rewards are terrific. But if you look at the market cap of QuickSwap, it's super low. So to the extent you are a user of any DeFi protocols, or there's one that you want to specifically call out for an innovation, like Olympus DAO has been shouted out a couple times today. It would be great to hear your perspective on a project that you're excited about.
I'll do a little shameless plug here. Keeper DAO, which is incubated by Amber Group. So it acts as the on-chain liquidator, liquidation, and
that's
keeper.
Rook, right?
Yes, exactly.
Yeah, that's a cool project.
Thank you. And I think it has different parts of it. The corporation game where we'll bring all the keepers together instead of bidding in gas wars against each other. We'll actually collaborate and profit share. And the game, theoretically, it is more optimal. And then we also have the hidden game where you, as a user, if you go use MetaSwap, MetaMask Swap, or other swaps, your order might be fund run by all the bots out there scanning opportunities. But if you go through Keeper DAO or a hidden game, then actually prevents a lot of that possibility of happening. And we keep building a lot of the other neat features that are coming up, and really letting the community decide as well. So yeah, check it out if you don't know about us already.
One of my favorite projects that we've also invested in is a company called BitsCrunch. What BitsCrunch does is it enables marketplaces such as Rarible to avoid wash trading. So we all know, the issues Rarible faced, and it's predominantly to do with understanding who's transacting with whom and why, and a lot of those transactions were merely wash trades. Bullish on BitsCrunch because it's a cash flow positive company. They're building a lot of really good tech. While everybody's focusing on NFTs, nobody's focusing on indexing NFT marketplaces, and BitsCrunch sort of fills that void. So when we actually spoke to the team, we realized they're very, very competent, and that's when we decided to invest in them. Just because we saw that their thesis is validated with the transactions and customers that they've built over time.
I'm going to mention a project that I have no financial interest in. It's called UBI, so it's Universal Basic Income. It was the first token that was created where you can feed value back into a wallet without any participation by the wallet or the user, which is a big change in the market. It was created by my friend Santiago Seri in Europe. And basically the idea is to have proof of humanity. So you prove that you exist, you prove that you have quality relationships, and that increases your reputation on the network. And then you earn these tokens over time as a drip into your MetaMask wallet. And it enables basically the community to form a global currency which is distributed by reputation and by proof of humanity. It's been performing really nicely economically, and I think it performs the basis of global UBI in the future, which I think could be a very interesting experiment.
And there's a lot of FUD in the space, as I'm sure you guys are all aware, right? So if someone said to you, I'm sure, over the holidays, people are going to, ask you what you do, and they say, yeah, but what if the governments ban DeFi? What if they ban it? How do you respond to somebody who expresses that type of sort of blanket criticism?
So I used to run corporate finance for Bear Stearns in China. And I won't tell you how long ago it was because it's embarrassing. But we had a rule back then in 1991 when I was working on the first IPO from China, which the Chinese government outlawed. Every third week I read in the South China Morning Post that my deal was being outlawed and I was about to be deported. And that went on for a year and a half. But what we realized, which was interesting, was every time they outlawed something, the right response was to buy it, right? Because what the Chinese government was doing was telegraphing to you the thing they were most concerned about. Because the Chinese government doesn't spend time passing laws and prosecuting people over things they don't care about or they're not worried about. So if China outlaws something, buy it, because it's up and coming and they're scared, and the chance of them able to control it is essentially zero. So I look at the bans, I look at all this stuff, I say, wow, we are doing our job. We are scaring the hell out of the world. We're reforming in a way that we can, turn the equation around where the system serves the individual as opposed to the other way around. And I think that's what crypto's about. And I think that these bans are an indication that we're making headway.
So one of the things about bans is they just don't work. I fully agree with you. Let's say, in case one of the countries decided to ban gold, that we don't recognize the value of gold doesn't mean gold no longer holds value. Obviously not. Most of the countries have reserves in golds as well as US dollars. If they don't agree for the price of gold, other countries will. Same thing is with all the digital currencies out there. Of course, it's market linked. Another thing is that any ad hoc bans will only cause prohibition and illegal activity. A lot of projects, startups, they recommend using a VPN if you're accessing it from US or China or any of the prohibited countries. So all of that's going to happen. So ultimately, no country is ever going to be able to control or prohibit cryptocurrencies. And however, countries won't realize it until they give it a couple of shots at least.
I totally agree. This is the beauty of decentralization. And maybe 4 years ago when I first started in the space, that would have been a more legitimate question. But now I think we have enough consensus, and that's the power of consensus, that crypto is here to stay. You look at how many talent have flooded into the space this year or over the last few years, and the capital that's in it. We're talking about trading with the world's largest hedge funds, family offices, private equity firms, VC firms. Sure, 1 or 2 countries can be out there banning it. But, and to be honest, right, me being, again, born and raised in China, I'm not surprised by their stance. That is more ad hoc, but overall, I think right now we've reached to a point, we're past the tipping point where we've reached enough consensus that it is here to stay. And you look at what happened in China, maybe the ban on mining is quite surprising. But then people just move. Capital was very efficient. Most of them landed somewhere in the US. If not, elsewhere in Russia or Europe, and you will have 1 or 2 regions restricting it, but at this point, we're too global for that to happen.
Hear, hear. I think that's the end of our panel, so can you please give everybody a round of applause?
Yeah. Actually, guys, since you guys are the last, we actually have room for Q&A. Does anyone have any questions for this group of experts?
Thank you. Hey, something came to mind when...
Talk louder.
Excuse me, Susie. Something came to mind when you were talking about possession, holding your own possessions. And in that conversation, I was wondering, like, what if there was I think you were talking about maybe an external event, possibly, I don't know, but what if there was like a power outage or a internet shutdown? That's what it was. Or a cyber attack or something like that, shut everything down. Is that when holding your own stuff is really important, or is there any concern with that, is what I'm wondering. Related to the market.
I worry about that.
Not in value of the market, but in like access and things disappearing and so forth.
Well, you know, your private key is your private key, right? And so as I would recommend that you store it in some way other than purely digital, you know, so that if all the electricity in the world does go off, you can actually prove that key. Certainly it would be an inconvenience. I don't know if it would be the end of the world, but certainly it provides a challenge if we depend on, you know, digital assets and they all require electricity. You know, at some point that could be our, you know, it's going to end up being that our physical nature is our key vulnerability, right? In the long run, it's going to be safer to have a digital asset that's intangible because it can't be taken from you, right? But on the other hand, to access it, you're going to require electricity, and that is a centralized asset right now until microgrids come up, which are growing. So I say, again, decentralization will be the answer to protect yourself. And if it turns out that the world is using, like, the Thunderdome, where energy becomes, the key leverage, I think you'll see microgrids come up, and people will have a vested interest in owning their own and sharing their own electricity.
He has a question.
Hi there.
Yeah.
So I work for a large fintech company in the wealth management space, and we build.
We can't hear you.
Sorry, louder? Okay. So I'm a project manager for a large fintech company, and we work in the wealth management space. We work with very large international banks and hedge funds. Some of those clients have come to us asking about tokenizations of either different funds, things like that, some of the things that you guys have already mentioned. While these clients appear to really want this, both in a centralized and potentially decentralized version, there seems to be a lot of resistance from inside the organization to move forward with that. How would you suggest creating a entrepreneurship within a large organization that has funds and talents to actually create innovation in this space with large international firms?
So I used to work at an enterprise blockchain firm, and I had a lot of those very same conversations as you've had. And I think what you'll find is there'll be strong enthusiasm from the innovation teams to try to explore porting their existing tech stacks to a tokenized version. But the resistance will be when top management recognizes that in order to achieve the benefits and unlock the actual operational efficiencies, it will require, frankly, laying people off. And I think that there's a big inertia at some of those large asset managers. So, if you're able to extract some value from the innovation departments and that can assist with your broader relationships, then I think that's terrific, but you will meet resistance for the reasons that I mentioned.
And one of the things, like just to add to what Harrison said, is that like one of the ways you could possibly foster innovation within your organization is by having everyone spend a part of their time, understanding, working with startups, seeing how they function, and then encouraging dialogue within. A lot of times, like even at Frontier, we've had several of our teammates leave and start their own enterprises. And we've always encouraged them, to create your own company. And in 3 of those instances, we even ended up funding those. So I think an organization that sees it this way can really benefit. One of the greatest examples we have in front of us is Google. Gmail, so many of the innovations that you see right now were all internal ideas that were created by the Gmail team. And we've not seen that level of innovation from Microsoft teams or anywhere else. And hence, such an approach can be really effective.
But that's a perfect example. The thing that's going to create change isn't calling it blockchain and isn't a bank engagement. It's the features that are competitively attractive that then demand the attention of the consumers who will choose their products based on the one that's faster, cheaper, more secure, right? And which costs you less, right? And so what's going to happen is that companies don't like to cannibalize, but they realize at some point they must. And so what's happening now is just like Gmail, Microsoft never would have changed Outlook. They would have left it as crappy as it always was, as crappy as it kind of is now, right? But they never would have changed it at all. They never would have let you at the SMTP server. They never would have let you send your own mail or control your own address if it wasn't for Gmail being a competitor. Right? And so what you're going to see is if your bank doesn't decide to at least have a parallel system which cannibalizes, then the next bank's going to do it. And once they do it, either your bank becomes a dinosaur or they jump to the new system.
I think there's a question right here, if there's time.
Yes.
Hello. I just wanted to ask, what do you think, like, your number one underrated technology in crypto is?
It's hard to hear. I'm sorry.
Oh, I was saying, like,
Speak into the mic.
what's the number one, like, project that you think's underrated?
I mean, it's tough because we're not allowed to give investment advice. But I think maybe to answer that question in a roundabout way, I think that what's really amazing about this space is that you can come up with an answer to that question sort of on your own. There's a lot of open information and so forth. So like for us, one of the best way to tell the quality of a project, like KeeperDAO for example, if you go to their Discord and ask a question, the speed in which you'll receive a response and will be in minutes. And generally that response will be somebody from who's not even on the core team, but in the community. So I think that signs of a good community are generally the best way to figure out what are the sort of undervalued or attractive projects.
Yeah, I think for me is probably a lot of the projects looking at the infrastructure side of the things. Right now it's a bull market. Everyone is very drawn by a lot of the the APYs out there and perhaps less focused on building what we just talked about, wallet solutions or maybe decentralized ID for future KYC or other purposes. And that is what's needed for the space to further scale. And I think the teams are focusing on building that now. We'll see fruitful outcomes in the next cycle.
Wonderful. How are the panelists feeling? Are you ready for one more question?
I would answer a quick answer. I'd say metaverses and tokenized self-sovereign identity.
You ready for one more?
Looks like there's a few more.
There are a few more.
Let's go. It was you right there.
All right. Hi, my name is Glow, and I'm actually coming all the way from Singapore. And
Same here.
Hello, sisters. But anyways, so my company, we've been working on multiple projects, right? P2E games and NFT project. But the bigger problem with P2E games is that we realized that some people that lost their employment, like factory workers. I'm talking like real life situations here. In Indonesia, we have 300 million, almost 300 million population, right? And the people, yes. So the people that are playing Axie Infinity, they're basically relying their entire life on there. But the tokens are not stable. So my question would be, what does it take for the P2E games to have tokenomics that is stable? So what does it take for it to achieve stabilization, for it to be dependable? And what does it take for it to be adopted by everybody around the world? Thank you.
That's a super broad question. I think the question was about the volatility of tokens. I think as this space matures, you'll see that, generally speaking, crypto assets will become less volatile. But the reality is that there's always going to be characteristics of projects where a particular token could be, quite volatile. So like with Axie Infinity, they just introduced some changes to the Smooth Love Potion tokenomics, which had some impacts on the AXS price. So I just think that volatility is going to be inherent to the space. But ultimately, the more a project is adopted, the more liquidity it has, which is a trend that's being seen across the space, the less volatility there will be.
Okay, wonderful. Just checking in. Are we ready to do 20? Because you all start at 9 a.m. too, so we'll just stay the entire night, right? How you feeling? We ready for one more question?
Yeah.
Absolutely.
Crypto's 24/7.
People came here to, the people
I'm on
came
Twitter
here.
anyway. I mean, might as well be on a stage.
Quick question. I have a sneaker store. We buy, we sell, and we trade sneakers all day, every day. One of the biggest questions I've gotten over the last 4 years is, do you accept Bitcoin for the buy-sell trade market, which we see is skyrocketing now? So how would I, or how would me and my staff, how do we answer that question, and how do we get into that space?
So there's actually something called the Lightning Network. There's something called the Lightning Network, which is a platform built on the Bitcoin protocol, which enables microtransactions that happen very quickly and are very inexpensive. And that would be, in my opinion, the best way to enable yourself to participate with Bitcoin. And you can resolve that down now to credit cards and to electronic payments that come off people's wallets using QR codes on their phone. And you would be paid instantaneously, and you'd get an immediate exchange into what fiat or crypto or Bitcoin, however you choose. And that's the specific purpose of the Lightning Network. Lightning Network.
What I would recommend is you also look at Coinbase Commerce. It's a crypto payment gateway that literally helps you accept many currencies other than just Bitcoin.